Hi, today we're going to talk about Stacks with ticker symbol STX. And the reason why we talk about Stacks is because the price was shooting up quite drastically recently. We see a 20% pump almost in the last 24 hours. And with that pump, Stacks got into the 64th place in terms of market rank. So Stacks has now quite a bit of a market cap. We are looking at more than $1 billion US. So the question is, does it make sense to still buy Stacks? And in order to answer this, we will not only look at the Stacks chart in terms of US dollars, we will also look at Stacks in Bitcoin, valued in Bitcoin, and last but not least, Stacks in Ethereum. So the Stacks price divided by the Ethereum price. And I will tell you why this actually matters, why it makes sense to look at relative prices of an altcoin to Ethereum. So let's start off with the US dollar chart. What's very interesting about this recent pump over here, this almost 100% pump since the middle of June, is that the price increase happened while trading volume didn't increase that much. So this price pump over here is very different to what happened here in April, where we had a lot of trading volume. Because normally we don't want to have this. We don't want to have a lot of trading volume while prices increase. Because what this basically means is that there's a lot of attention on the token, right? A lot of people trade this coin right now, and with this increased attention, the price rises. So that's probably due to some kind of pump and dump. Some large influencer or some large news might have come out. A lot of people look at Stacks, and with this, a lot of new buyers come into the market. But the problem with these price pumps that happen during trading volume peaks is that this is attention-driven price increases, right? So just because of increased attention, the price rises. But attention is fleeting, right? It goes from altcoin to altcoin. It's not something stable that will stay with the altcoin, and thus the price will not stay at this elevated level. And that's normally what you see. When you see a big spike in trading volume while the price goes up, subsequently you very often see a price crash. So in this case, it was around 30%. And when you look at other altcoins, you very often see a similar magnitude of price decreases after such a pump. So let's look, for example, here at this pump in February. Again, the price was pumping with the trading volume increase, and then we had a drop of, in this case, only 17%. This doesn't have to happen, but in general, it's a good rule of thumb. I think it's often too dangerous to get into an altcoin when the price increases while the trading volume increases. So here on the 9th of February, we didn't have this pattern, but very often we do. And so what's good about this recent price increase is that we got this 100% increase while trading volume did not go up that much. So you see a real supply and demand shift here. So this is probably fundamentally driven. This is not just hype getting people excited about the coin. There seems to be something fundamentally happening with Stacks that pushes the price higher. Now the problem with US dollar charts with altcoins is that we do have the price movements of the overall crypto market baked into this altcoin chart, right? So when overall crypto goes up, the altcoin is likely to go up as well. And when there's a big crypto crash, the altcoin is likely to crash. Now, why is that a problem when you look at those charts in this way? It's because when you buy an altcoin, your main motivation is probably to outperform the general crypto market, right? Altcoins are much smaller compared to the larger coins like Bitcoin or Ethereum. So in this case, for Stacks, Stacks only has a market dominance of around 0.09%. So it's way, way smaller than Ethereum or Bitcoin. And so with this lower market cap, with this lower market dominance, you take on more risk, and thus you want to have higher performance, right? More risk should be rewarded with higher performance. So the general idea of buying altcoins is not so much to get exposure to the general crypto market, but it's to outperform, to specifically outperform the larger cryptocurrencies, Bitcoin and Ethereum. And so let's look at the Stacks to Bitcoin chart. This is what you get. You don't get necessarily a very clear outperformance over here, at least over the long term, right? This chart starts in October 2019 and since then went down against Bitcoin by 23%. So the picture looks very different, right? This is the US dollar chart. It looks in general very positive. Looks like it makes sense to own Stacks over the long haul. But when you look at it in comparison to Bitcoin, you don't see any outperformance, and you want outperformance. You take on more risk, you need higher performance. Now, if we look at Bitcoin's dominance, we can see that it sharply dropped since the beginning of the year, right? So we were relatively high in Bitcoin dominance. Bitcoin as a fraction of overall crypto was hovering at around 70 to 60% for quite a while, but since the beginning of the year, it basically went from 72% all the way down to currently around 44%. So this is basically an altcoin rally, right? Bitcoin itself, it stayed basically flat in terms of price since the beginning of the year, but the altcoins, they really rallied, and thus Bitcoin as a fraction of overall crypto got smaller. So small that nowadays more money is into altcoins than into Bitcoin. Only 44% of crypto currently is Bitcoin. And so when we got this big altcoin rally since the beginning of the year, we might want to know, how did actually Stacks do versus Bitcoin since the beginning of the year? And so if we take that measured move, we are looking at a 160% outperformance. So that's also what we would expect, right? We don't want our altcoin to underperform while all other altcoins, they outperform Bitcoin. Now, what I like to do is to look at the altcoin's performance versus Ethereum and not so much versus Bitcoin. And the reason is Ethereum in its nature is closer to altcoins than Bitcoin is. So Ethereum is very actively traded, right? People get in and out of Ethereum way more often. There are more transactions happening on Ethereum. Bitcoin is more like bought and held for the long term. So people DCA into Bitcoin. They hold it like virtual gold for many, many years. For Ethereum, there's more trading, more market timing happening. And that's the same for altcoins. So it's, I think, more of an apples to apples comparison to actually look at the altcoin and value it in Ethereum to see, does the small altcoin, the comparatively small altcoin, outperform Ethereum? So let's look at Stacks versus Ethereum. And now we can actually see, did Stacks since the beginning of the year outperform Ethereum? And if we look at this, we don't see any outperformance. We're basically more or less flat. So let's zoom in, get very close. Since the beginning of the year, which is this price over here, we are looking at quite a drop, 14%, 15%. So that's bad, right? We don't want this. So this in general tells me that probably holding Stacks over the long term, over many, many years, unless you have very strong fundamental reasons, is probably a relatively dangerous game to play. You can bet on the much safer Ethereum and you can outperform. So this additional risk you take on when investing into this comparatively small altcoin is not getting rewarded, or at least it didn't get rewarded in the past. Now, if you've got very strong fundamental reasons, this channel is not about fundamental analysis, we're just looking at the charts, and you do have a strong conviction, Stacks has strong drivers, stronger than Ethereum, that will push this chart further up, then of course hold it for the long term. But me personally, just by already looking at this chart, I would probably only use Stacks for short-term trading. Now, does it make sense to hop onto this train for a short-term trade? Now, you're probably not so interested in making Ethereum, in making ETH when trading altcoins, right? In the end, you want to make US dollars. And so we already said that there's a lot of general crypto market influence on any altcoin when you look at the US dollar chart. So it's important to understand what the general crypto market is going to do. Or at least you need to have some kind of opinion on this. And here again, I think it makes most sense to actually look at Ethereum and not at Bitcoin to gauge where the general altcoin market is going. And the reason for that is correlation. So what you see over here is a general correlation analysis I've done recently with a few altcoins, Bitcoin, Ethereum, correlation versus ADA, Chili, CRV, Polkadot, Chainlink, Tron, XRP and Quant. And when you look at these altcoins correlation versus Bitcoin, you see that the average correlation is 0.6. When you look at the altcoins correlation versus Ethereum, you see it's 0.65. So it's the highest among all those cross correlations. When you compare each individual data point itself, you see in every data point, the correlation to Ethereum with the altcoin is higher than the correlation of Bitcoin to the altcoin. So Ethereum is a much better vehicle to gauge how altcoins are going to perform. So just a quick recap, what does correlation mean? It means when one asset goes up, how likely is it that another asset is going up as well, and vice versa, right? So when Ethereum is going up or down, ADA has approximately a 77% chance to go into the same direction on that day. And so you see that Ethereum walks in tandem with other altcoins way better than Bitcoin does. So to understand the general market sentiment, you want to understand Ethereum. And so this is the Ethereum chart. Where is Ethereum heading? To answer this question, I like to look at two moving averages. The 39-day moving average here in dark blue and the 23-day moving average here in light blue. And we can see that Ethereum currently is between those two moving averages. Now, why are those two moving averages important? That's because of some backtesting I've done quite a while back. So the idea is that you are in the market whenever the price of Ethereum is above the moving average, and you are outside of the market whenever the price is below the moving average. So you sell when the price falls below, you buy when the price goes above. And that's a very simple trading strategy. And you can see here the portfolio line in gray is way higher than the buy and hold of Ethereum here in white when you use this trading strategy. So this is the 23-day moving average that we see here. So that's this purple line over here. And this is the 39-day moving average. So we can see both of those strategies, they outperform buying and holding quite a lot. And when you do this kind of analysis, this kind of backtesting for a lot of moving averages, the result you get is the 23-day moving average works best. It would have given you 166% per annum versus buying and holding only 56%. And for the 39-day moving average, we also have quite a nice performance. So this is backtesting made on Ethereum. So if you want to understand the overall Ethereum market, where is Ethereum headed? You want to look at, is the price above the 23-day moving average and above the 39-day moving average? And currently the picture is mixed. The 39-day moving average has been a resistance level. The 23-day moving average has been tested and then recently been broken. So I see this actually at a potentially positive sign, because also over here we see the price is going up while trading volumes are not going up. So this price increase seems to be comparatively sustainable. It would be bad if we would see increased trading volume while the price goes up, but we don't see that. Price increases, trading volume goes down. So it's not because of increased attention on Ethereum or on crypto. The tendency is rather that crypto is less interesting now. We're going sideways. Less people are looking at crypto content and trading activity is going down, but prices are still recovering. They're still going up. And we have even crossed the historically most important moving average, the 23-day. And I wouldn't be surprised at all if we actually see the 39-day moving average being broken very soon as well. So I'm comparatively bullish in the short term for Ethereum. And so that means at least short term, I'm also bullish on Stacks. Long term, it's a dangerous game. It doesn't outperform Ethereum. But short term, the market looks bullish and we see this price increase without trading volume increasing a lot. So those are all very bullish signs. So if you're considering getting into Stacks, and you're a risk taker in general, you like trading alts, no financial advice of course, but I think Stacks doesn't look too bad in terms of US dollars. If you want to make a short-term trade, I wouldn't stop you from doing this. If you enjoyed this content, feel free to give this video a like. YouTube will then help show the video to a new audience. If you haven't yet, feel free to subscribe as well. I publish videos 2 to 3 times every week, and feel free to join our Telegram channel as well. It's completely spam-free. We like to discuss crypto topics over there. So if you've got any questions, if you want to ask me something, if you want to ask anybody in the community, the Telegram channel is where you can find us. See you next time. Bye-bye.